Well, the rand has firmed in early trade ahead of a closely watched interest rate hike decision by the U.S. Federal Reserve. That's due later in the day. Traders are waiting for the Fed policy announcement to actually happen now. Michael Treherne is portfolio manager at Vestact, I beg your pardon, who's joining us for more analysis on that story and much more. Michael, good to see you. The rand has held its ground under 17 rand to the dollar. That was at midday trade. Could this news then from the U.S. shift things negatively for the rand?
Yeah, afternoon, Temekile. The rand's currently at around 16.85, so holding nicely below that 17 level you mentioned. Yes, for sure. Whatever the U.S. Federal Reserve says this evening is going to be a massive mover for the U.S. dollar, and as a consequence, our exchange rate with the U.S. will move with it. It all comes down to what is the U.S. Fed's forecast on future interest rate hikes. If they forecast that they're going to have a lot more hikes than expected, the US dollar will strengthen quite quickly because money will rush in to take advantage of those impending higher interest rates. Obviously, if they indicate the opposite, it'll be pretty good for the rand, and we'll see us moving closer to the 16.50 level. So expect volatility this evening and tomorrow morning in the currency.
Oil for a moment, because that price rose by $1 a barrel. That was an early trade. What's pushing that shift?
Yes, it's got worse in the last hour or so. We're up now to about $104 a barrel. It looks like usual tensions in the east with Russia and with sanctions. The worry is that further sanctions on Russia will mean less oil exported. And less oil in the market means that there's more people fighting for fewer resources, and that just pushes up the price. We do expect some price volatility in oil as well with the Federal Reserve's announcement this evening around interest rates, because that has a very big bearing on economic growth and our use of oil.
Speak to us quickly about the performance of the chemicals and explosives group, AECI. They've posted a revenue climb of almost a third in half a year ending in June.
Yes, so AECI is a chemicals company. Their main sectors are mining, or their main customers are mining and farming. They saw record sales and also record profits. What has driven that was very strong numbers coming through on the commodity side. Due to high commodity prices earlier in the year, it meant that miners were spending a lot more money on explosives and exploration, which has been good for AECI. Unfortunately, they haven't escaped unscathed from the Ukraine war, and their agriculture division was struggling a bit because of it. But overall, they increased their dividend, which shows management's faith in the performance going forward and the amount of cash flow that they were able to generate in the half year.
And Google parent company Alphabet has reported second quarter revenue that met analyst expectations, actually. Are you just as bowled over?
It was a welcome surprise. After Snapchat released their results earlier in the week, there was a worry that online advertising was going to drop more than analysts had expected. Google, being the big daddy in the industry, showed that size does matter, and they managed to surprise analysts with their online earnings or with their online sales profits, and it's resulted in the Google share price jumping 5% since those results were announced. It's worth noting, though, that Google is still down about 25% for the year, so they haven't. It's been a tough time for technology companies. Particularly coming off the back of the boom days around COVID when everyone was stuck at home.
Michael Treherne, good to speak to you as always. Thank you very much.